Right, so let's talk a bit about US 30, about the Dow Jones. So it's one of my favorite instruments to trade. Okay, it's a great instrument to trade. It's not the most easy one, but once you get to know its behavior, you spend time with it, you analyze the price action. It's a very rewarding, instrument to trade, a very rewarding pair to trade. So just like gold, it gives out a lot of pips, a lot of points. It moves a lot. So once you master it, I think it's one of the best, financial instrument you can trade. Okay, if you prefer to trade on other indices like S&P 500 or Nasdaq, all this information is applied to those as well. So it's pretty much all the same stuff. Me personally, I've tested on 3 indices and I prefer the Dow Jones. But if you prefer to trade, SPX, Nasdaq, whatever, you can do it, and basically it's the same rules, the same behavior apply to them as well. Okay, so let's talk a bit about the different behaviors that the Dow Jones has. Okay, so first of all, it's correlated with the DXY. Okay, so it's correlated with the value of the USD, and it's going to be inversely correlated. Okay, what does that mean? It means that, let's say USD is on the left hand, and let's say US 30 is on the other hand. Okay, and on this end you have indices, stocks, okay, all the stock market, and on the other hand you have the value of the USD. Okay, so usually when the value of USD appreciates, okay, just like when we talked about the DXY a few chapters ago, usually the value of stocks, indices, in this case US 30, will go down. Okay, money will flow out of US 30 and go into the value of USD if it's getting bought on that day or during that week. Okay, if it's the opposite, if USD is going down, then the money is going to be moving into indices, into stocks, into the Dow Jones. Okay, so in that case we will see an appreciation of the US 30. Okay, so it's always the inverse. So if I'm looking at the chart in the morning, New York session, and I'm looking at a bearish DXY, so if I'm looking at a DXY that's going now down, then I'm expecting a US 30 to go up. Okay, that means the correlation is good, and everything is on track. There's no manipulation, there's no weird price action, everything is fine. Now, what happens if, for example, we have the DXY going down and we have US 30 going down as well at the same time? Okay, so that means that USD is depreciating and stocks, indices are getting sold off at the same time. It means that something is going on. It means that there's some kind of manipulation. Okay, it means there's some kind of artificial movement. Okay, so usually, like we said previously in the DXY section, the DXY is going to show the true intention a majority of the time, maybe 70, 80, 90%. You're just a higher probability of the time the DXY is going to show the true intention of the institutions. Okay, but other times US 30 is going to be the true move, it's going to be the organic move, and the DXY will be manipulated, will be artificial. Okay, but let's take the most likely case, which is that US 30 is being manipulated during that morning. Okay, why is it being manipulated? Why is the price action artificial? Why is the DXY going down and US 30 going down at the same time? It's simply it's simply a question of positioning and liquidity. Okay, so if, let's say, JP Morgan here wants to short the US dollar today and buy the Dow Jones. Okay, however, let's say the price of US 30 is here. Okay, and you want to buy it at this price, and this price, let's say it's the 61.8 retracement. Okay, they might start selling USD early in the day, okay, at the beginning of the session, on other currencies and other instruments that they have in their portfolio. Okay, however, US 30, they want to buy it, but their ideal entry is here. So basically they will just bring the price down to this best possible price, that so they can enter their trade. And this movement here, okay, from here to here, might be 100 points, might be 200 points, might only be 50 points. Okay, doesn't really matter. Could last 1, 2, 3 hours. Okay, depending on how they structure their day. But this whole movement is artificial. Okay, because at the same time USD is going down. And it's artificial just because they're basically pushing the price artificially to get their perfect entry. And then right when they get to their area that they wanted to long, that's where they're going to start their trade, and everything is going to come back in order. US 30 is going to go up and USD is still going to fall. So DXY is still going to push down. Okay, so usually that's what happens. So that's why it's always important to look at the DXY and try to understand what's going on. Okay, is the correlation inverse like it's supposed to be, or is it going in the same direction? Okay, if it's going the same direction, what kind of manipulation is going on? Is there some kind of fundamental information? Do we have an NFP coming up? Do we have inflation? Do we have FOMC? Do we have some type of economic data that is important that the market is preparing for? And that sometimes justifies the artificial movement. Okay, and that just helps you to understand the whole storyline of what's going on in the market, and basically just have a better understanding and make a better trade. So next, institutions will have a tendency to test a significant level, technical level, multiple times. So no need to be afraid of missing the trade. You will usually have a few opportunities. Okay, so basically this is very, very important. Contrary to gold, usually the indices, Dow Jones, when it reaches a technical level that institutions want to start a trade at that area, it will test it, multiple times. So let's say you're looking to make a short at this area, let's say 35,000. Price is going up, 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 up. We get to this area and we have a rejection. Okay. On gold or other currencies, you might just see, a bounce one time, a big rejection on that level and price running away, and you basically just, you can just only enter on the retracements. Okay. On the Dow, that's usually not how it happens. Okay. Usually it takes time to, enter position in the market. There's some kind of accumulation phase, accumulation period, and you would usually see the market testing a couple times, creating some form of consolidation at that area, and then afterwards making the move. Okay, so there's no need for FOMO, fear of missing out. Okay, you can take your time, and it's great to know this behavior because you can really take your time and make sure that this area is the good level that you want to take your trade, and the market will test it a couple times. Institutions will accumulate around that price. It's very rare that we touch and go. Okay, that almost never happens on a reversal on the Dow Jones. Okay, so it's a good behavior to know. When decisive, the price action is very linear, and when it consolidates, that means there's a potential change in direction. Okay, so another great thing about the Dow is when it's decisive, when it's basically trending. Okay, when it's gone, once we have the end of the consolidation and it's moving, usually the price action is going to be very, very linear. Okay, same thing as with gold. That's why I like to trade them, because you can accumulate a few positions. You can have 2, 3, 4 positions on a large 4-hour swing on the Dow Jones if you want. Okay, that means that the fib retracements are going to be limited to 23%, 38%, okay, and sometimes, but very unlikely, 50%. Okay, no more than that. But most of the time is going to be retracements 23 and 38 fib retracements. Okay, so that's important to know, because if you want to add position, you're not going to be waiting too much for a 50, because it's very rare, and you're surely not going to be waiting for a 61. Okay, because if we have a retracement that deep all the way to 61.8, it means that the market is not really trending on the Dow Jones. Okay, when US 30 goes, it goes and goes and goes and makes so many points, in a couple days, a couple weeks, could do 1,000, 2,000 points, in a single line straight without, much retracements. Okay, so it's great to know. Next point. So indices are the main instruments traded by institutions. So there's a lot of manipulation. Okay, institutions are always battling each other to get the liquidity, to get the best price, basically, right? So there's like a couple groups around the world. You have JP Morgan, Goldman Sachs, HSBC, Credit Suisse. There's many different institutions, and they basically are fighting in this market to basically get the best price to short and get the best price to long. Okay, and since it's one of their main trading instruments, I mean indices in general, okay, which is S&P 500, Dow Jones, and Nasdaq, and the rest of the stock market, you will see a lot of manipulation on the Dow Jones. Okay, and it's linked with the next point. Okay, it has a tendency to exit the technical areas and look for liquidity. Okay, so it's always better to wait for the close of the candle to make a technical judgment. Okay, so what does it mean concretely on the market? It means that if you're looking for a level to do a trade, okay, so let's say market is going down, okay, and you're looking for this area at 30,000, let's take another round number, to do a long. Okay, you're looking to do a long on 30,000. You have a couple of fibs there, you have your moving average, fundamental is looking bullish. You have pretty much a lot of confluence, a lot of factors that 30,000 around there should be your level where you want to long. Okay, so price is coming down, and we get to the price and we leak below. Okay, let's say we go 100 points below. So let's say minus 100 points from our 30,000 on Dow Jones. Okay, and then right after, market comes back up really quickly. Okay, and stays above this line. Okay, stays above the support level. It means that this little wick or movement that we had below the support, it's a manipulation. Okay, it's a stop hunt. Okay, and as long as we come back and we close above the support or under the resistance, if it was the other way around, okay, then it means that we can make a good technical judgment and say, okay, this was a manipulation. Okay, they were basically fishing for liquidity. A lot of traders maybe were long here, had buy limits and they got stopped out. And then market, came back. Some people will try to short here. Some traders will try to short, but then market will bounce and make its move. Okay, so as long as market comes back, above or under the support or resistance and holds it and doesn't leak below, it means it was just a manipulation. It's expected of indices. It's expected of the Dow Jones, and basically it's natural. It's a normal movement, and basically we just forget about this part and we resume our trade how we're supposed to. Okay, so it's one of the many key behaviors of indices, so very important to keep that in mind when you're trading. And finally, for the stop loss, I recommend a large stop loss, so I would say between 50 to 150 points. Sometimes if you're looking for a big swing in 4 hours or on the daily, maybe you can get to a 200 point stop loss, but that's very rare. Okay, and the stop loss is very large, but that's because the US 30 is very volatile and it moves a lot. Okay, it can move, you can risk, let's say 150 points, okay, for 500, 600 points take profit, and basically you can have it completed in the same trading session. Okay, so basically completed in maybe 3-4 hours. Okay, from basically let's say 8 a.m. to noon. Okay, to 12 p.m. basically. Okay, and for 3-4 hours to 11-12 in the same New York session, even half in the New York session, you can have the move completed, and that's how much it moves. Okay, so if you try to put small stop loss, 20, 30, 40 points, okay, and try to do big swings, you're gonna get burned, you're gonna get stopped out. Okay, so it's better to put larger stop losses, have larger take profits, because US30 is going to make those moves, and it can do it very, very fast. Okay, and that's it for the different characteristics. So let's go and do a few examples on the chart now.